What were you guys valued at the time before making the pivot? And then what are you guys currently valued at now?
We were a public company when we pivoted to crypto in 2017. And I'd say the low point, we were probably valued around 100 million Aussie dollars. So that's like 75 million US. In 2022, it was about 6 billion. And now it's probably somewhere around 1.5.
Guys, welcome back to Andrew Asks How. Today with me, I have the CEO of Animoca Brands, Robby. Welcome to the show. How are you doing?
I'm good, thank you. Good to be here.
We appreciate, Robby, you jumping on. And for those that know you, but don't really know you, kind of your backstory of who you are, the entrepreneur, the businessman, let's dive into that. What were you doing before crypto, before you got into crypto, before you became the CEO of Animoca Brands?
So I was CEO of Animoca Brands before we went into crypto. So we were a free-to-play mobile game company, actually. I joined the business about 12 years ago. I'm old friends with Yat, who's the chairman and co-founder of the business. And we were a free-to-play mobile games business. And in 2017, we discovered blockchain. And we discovered blockchain because we got to know a team that was working on a hackathon project in Vancouver, and they were in the Ethereum community, and they wrote the ERC 721 standard. So they invented the NFT, and that team became Dapper Labs. And so we worked with them on a game called CryptoKitties. So we published CryptoKitties in Greater China. And that was kind of our gateway drug, as it were, to crypto. Because after working on that with them, it was kind of a transformative experience for us, because it gave us a real kind of window into the possibilities of what it would mean for gamers to have property rights over their game assets. And so that was kind of our aha moment. And from then on, we kind of vowed that every game we made from then on had to be a blockchain game.
There was a paradigm shift that obviously took place between you and your internal team at the time with that brand. Mm-hmm. What was the internal shift like from an operations standpoint to a business leadership standpoint to a product standpoint within the team, going from mobile native games, traditional, to blockchain? And how long did that pivot take you guys?
Good question. I'd say the pivot took a while. I'd say it probably took the better part of, truthfully, 4 years.
Wow.
I think there's probably 10% of the organization that's still pivoting. Because it's difficult to embrace. And don't forget that also, we'd been an organization already for 7-8 years before crypto. And so not everybody is ready to make that change, just in the same way that we have investees or work with other game companies, for example, who are interested or, crypto curious, if you will. But it's very hard for them to get the entire organization around Web3. And I think it seemed easier than we expected at the beginning. But one of the challenges is helping people to really deeply understand what it means, as opposed to kind of just getting the surface level bits, right? And I'll give you an example. For people who make games, it's very relatively straightforward for them to understand the idea that, if you tokenize your in-game content as NFTs, then players can own them, and you can make a marketplace, and they can trade their stuff and sell their stuff. And, it's different infrastructure, but it's essentially a Web 2 construct, right? Because you can make a marketplace in a Web 2 game. It's just that it's a closed marketplace. But what they don't get initially is they don't get, okay, so if I launch a native utility token in my game, I'm going to want to have a staking program. And they're like, why would I want a staking program? It's a game. That makes no sense. When actually what they should be asking themselves is, if I have an open economy, what does it take to run an open economy? And one of the things it takes is to have token sinks so that people provide liquidity into your economy. And that's something that anybody who works in DeFi understands, but not necessarily people who make games.
Teams often, find themselves, pivoting or scaling downstream, upstream. You go adjacent market, you go up market, down market, adjacent market. You guys literally transferred industries. You were in one industry, had success there, literally stepped out, went into a whole other industry that at the time you guys did it was way more, quote unquote, new than it is today. So I can imagine all the consumers, all the brands, most of the brands that are here today were obviously not there back then, which means that the rate of failure was a lot higher.
Yep.
Did failing ever come to mind for you guys very early on? And how did you plan on stomaching that as an entrepreneur?
It's actually not a big deal because if you've been in the game industry, you're used to failing all the time because most games fail. And so people who are, this is true of entertainment products by and large, but the game industry especially is very hit driven, and you keep trying stuff and iterating and fixing it and improving it and hoping that stuff sticks. And so what happens is typically, something will make it big, and that pays for everything, all the other experiments that didn't work out. And that's kind of how gaming works. And so I think in our case, when we came to Web3, we were not, we knew what we were in for, but mainly we were in search of growth because, it was both a push and a pull process. It was a pull process because we were attracted by the opportunity, but it was also a push process because traditional Web2 mobile gaming, we saw, diminishing returns because the industry was slowing down, the cost of user acquisition was going up, and there were things driving us away from Web2, which was why we were out there looking around and then discovered blockchain.
When you guys had made the step out of traditional industry, mobile gaming, into the Web3 one, was your digital footprint the same, or did you guys find yourself having obviously all the experience in the world, but your digital footprint within the crypto niche at that time wasn't very big? So would you consider yourself having to start over again? Like the company, like Animoca Brands, the company itself, has experienced two separate lives and both have endured startup culture.
So there's a lot of commonality to startup culture in software, just generally. But I think for us, definitely there was a steep learning curve in terms of getting to understand the technology and the landscape of what was going on in crypto. I guess we came in literally like on the back of the ICO summer, basically. Prior to DeFi breaking out. And it took a long time. It took us the better part of 6 months just to get a small handful of engineers comfortable with working on blockchain and programming Rust and Solidity and all that kind of stuff. And I think it took a little bit longer than that for us to really understand how to present these games to players. But I think that we were lucky because we had a vision for how these games should work, and I don't think the thesis has really changed that much, to be honest. The execution was much harder than we expected. We had to train up the engineers from the ground up because by the time middle of 2020 rolled around, you couldn't hire a blockchain engineer because they were too expensive. And so we did a lot of internal bootstrapping. But I think that a lot of those entrepreneurial muscles were already there. And particularly because we came from mobile gaming as an industry is all about growth hacking. It's all about how do I bring users into a user acquisition funnel and filter out the most desirable users. And those skill sets work across pretty much any consumer software business.
I've heard a lot of takes. I've never heard that one. That's interesting. To paint this entire picture, before we dive into what Animoca Brands is, what were you guys valued at the time before making the pivot? And then what are you guys currently valued at now? Obviously, rough estimate number is great. You don't have to say to the number. So what's been that valuation difference between the numbers of years in between?
So I think the low point, we were a public company when we pivoted to crypto in 2017. And I'd say the low point, we were probably valued around 100 million Aussie dollars. So that's like 75 million US, I think. And in 2022, it was about 6 billion. And now it's probably somewhere around 1.5.
That is awesome. You guys made the right call. Obviously, you know this, but that is awesome to hear that. Within that year difference, you guys made the right call.
Well, we had conviction. I think we can take credit for having conviction about Web3 and crypto. But a lot of it is also just, it's, as they say, there's a lot of luck. And I think what we can take credit for is when something lucky happens, to recognize it and act on it.
I do want to dive in a little bit more into this. Obviously, those years were very crucial. If you had to advise and just kind of overall give sound, practical advice to brands that are also making that jump, or maybe they're starting fresh, new in the industry, and they're trying to scale to even 1 million a year valuation, whatever their revenue is, whatever the holding is, whatever that may be. What would be your 3 practical pieces of advice that they can do today? It's not exclusive to startup type, not exclusive to team member size, not exclusive to this, that. What would you say 3 practical pieces of advice that you would give to any entrepreneur starting in really any industry, especially ours?
Okay. First piece of advice, which I give constantly since my first startup, because I made the mistake the first time around, is I don't recommend being a solo founder. I think it's always best to have partners because you're going to work a lot of long hours and it's hard, and that's going to happen regardless of whether you're by yourself or with some friends. But the more smart people you can have around you, the better. And particularly if you have co-founders, then also everybody has a sense of responsibility, which means the buck doesn't just stop at you, it stops at you plus a couple of other smart people, and you can share not just the burden of responsibility, but the sense of obligation of the problem solving and the responsibility to your shareholders and investors and everybody else. And, it's hard enough without help. And so it's good to have help. Along that same line, I would also say there are a couple of truisms when you start a business. If you decide to go externally and raise capital from others, my personal perspective is don't pay attention to valuation. Doesn't matter what it is. Don't fight over the valuation. Just if people, the old saying is basically if somebody's offering you money, take it. Because they're not always offering you money. And most of the time, I would have been the guy who in Mark Zuckerberg's position would have taken the $1 billion buyout before going public because it's a really good offer. And it's more often than not the right choice. So when I see newer entrepreneurs saying, oh, well, I'm not sure I want to have Sequoia on my cap table because, my valuation should be higher. I'm like, no, just take the money. It's better to have somebody smart allied with you who will help and support you on your mission, because ultimately it's going to be very hard and you want to have as many people helping you as possible. And that includes your shareholders and investors because they have a vested interest in making sure things work out.
That is very sound advice. I appreciate that, and as well as the audience will too. And if I had to ask you today, August 21st, when it's being recorded, 2024, how would you describe Animoca Brands to somebody who's hearing about it for the very first time?
Sure. So we do a few things. Our core business is that we are an entertainment company. We make games. So we have studios around the world, and we make video games of all types, but everything uses Web3. So we make games for mobile as well as for PC. And we have also an asset management business. So when we pivoted to focus on the intersection of games and blockchain, we started to make investments in our industry. I think for a variety of reasons, but amongst them, the fact that the industry was very new and a lot of our friends were also starting businesses at the same time in this space. Some of them were startups, and building tools and marketplaces and infrastructure that we would need for ourselves as well as the industry. So we wanted to support them. So we started investing in L1 and L2 blockchains and wallets and marketplaces and other people who make games. Anyway, long story short, we now have about 550 companies in the portfolio. We invest both strategically off our balance sheet as well as through a venture fund called Animoca Ventures and a private equity fund called Animoca Capital. And so, from the perspective of many people in Web3, we're actually known more for being an investor than we are for making games. And that's really only because we've made more investments than games by now, because making investments is much faster than making games.
Yes. I've heard. This is awesome. For extra context, within the companies you've invested, how much do you think has been deployed over a period of time?
Good question. Rough number, $500 million.
Wow. It's a pretty number. And I'm sure you know this, the word investing has gotten popular. I think the past decade, maybe even the past 2 decades. A lot of retail thinks they're institutional investors now, right? Mm-hmm. Everyone thinks that they're the next investor into Apple. And while that may be true for some, that is often not the case. Obviously, it's a numbers game. Math has to do the math thing. And if I had to ask you guys, what are the 3, 4, or maybe 5, or even 2 or 1 principles that you guys rely on before making an investment? Obviously, a smart investment, not saying it's going to happen if you do what Robby says it's going to happen or do, but you can add that into your factor sheet of, okay, if this happens, if this is the investment and this is what I'm seeing, the outlook, the possibility of a good investment could occur. So what would be those 3 things for you, do you think, that you guys use that anybody could apply to their investment strategy?
Sure. I'm not sure it's anything novel. Obviously, meaning it's not things that you can read this on Twitter. Lots of people, lots of great investors out there often follow some just basic fundamentals. I mean, the team is the most important thing, and I think one of the things, particularly about a new industry like what we're doing in Web3, is to see that the team really understands what they're doing, understands the space, and shares perhaps a similar vision of where the space is headed. So, for example, in our case, we really believe in this idea of digital property rights and that this will be transformational to what happens on the internet. And so we like to see companies that we invest in, share a vision of that future, because if we feel like if they agree with that, then we also then agree on this idea of a timeline, which is that this is an inevitable transformation of the web. And so therefore, it helps you to think long term because you see this as something that is inevitable. So you invest also for the long term because you know it will happen. It's just a matter of when. So the team is very important, understanding that they have that shared vision. I think often we tend to look at co-investors, and I think people sometimes use that as a shortcut. They're like, oh, somebody with a big name is investing, so we'll invest. I think that is an oversimplification of the fact that as a professional investor, if you get to know other investors, basically and this is relatively new for me because we've only been in this sort of investing mode for the last 6 years or so. So we're relatively new at it, but we co-invest with lots of other firms. And once you do enough deals with other firms, you get to understand what other people's competencies are as well. So for example, I know, if a certain firm is looking at DeFi investments and says they're going to lead the round, I want into that deal because I know they really know their shit on DeFi, basically. And it may not be an area that I know enough about, but I know their domain expertise is there. So I want to co-invest with them, and so on and so on. So signals from other very smart investors are always something to look for as well. It's not just about the brand name. It's about really understanding, the people and having a working relationship with them. I think sometimes you can also just have a thesis based upon your understanding of a technology and an audience. So if you really understand, collectible card trading, for example, like the guys at Dapper, right? The guys at Dapper basically said, we think we can make an innovation to card trading, not only through making them NFTs, but because we're going to make these video moments. And so they invented a category and they doubled down on it. And they're like, look, we just think these are cooler than static cards and everybody's going to love this. And we're going to stick to this until this becomes a thing.
You mentioned the concept of digital property rights, and obviously it is in the brand's bio on X, Twitter. We can't miss it. You mentioned you're early to this. We're early, as in us as an ecosystem at scale. I would agree with this. Mark Andreessen had said this. I read on my timeline like an hour ago. I wasn't planning on asking this, but I saw him like, this is a good question to ask. So Mark Andreessen said this, and I quote, "You always feel like you're too late, when in fact a lot of founders feel because they were too early."
Yep.
What do you make of that quote? And what would you say to that, being an industry that is super, super early and making all the bets that you've made?
I think that for me, success as an entrepreneur is survival. Success as an entrepreneur is when I can look at the business that we've built and the fact that for the last 15 years, we've made payroll every month. That's success, right? We've managed to keep a lot of people gainfully employed, and that's something to be really proud of. And I think if you can just make that your bar and your threshold, then success in technology will come because of longevity. Because don't forget, like, we've been working at this for a while. It hasn't just been this. I mean, Yat and I have been friends for 28 years.
Wow.
And we met working, not in school. So we did Web 1, we did Web 2, and now we're on Web 3. So it's also about longevity, because one of the reasons that we invested heavily in Web 3 is because we felt like we'd experienced lots of the dynamics of what was going on in 2017, 2018 before in Web 1. We recognized trends based on what we'd seen before. And so it was about being in the right place at the right time. And, there's a generation of founders that's 15 years older than us that was able to do that in the 90s with Web 1, frankly, because they saw cycles repeat as well. So I think part of it is also just survival and longevity and being able to stay positioned in the right place for when, the bus comes along, and then you can get on the bus.
For what it's worth, I see marriage the same way. The longer you're married, the more successful it can be deemed as. I think, the goal of being married is to stay married. And I think your point across with businesses and entrepreneurship, the point of being an entrepreneur is to stay one. And I would agree with that as well. And I do want to get your take on, the conversation of like IP. And obviously the conversation around IP it's very saturated. Like everyone has their own take on it, as they should to some extent. And Julian from Doodles, the CEO, was on with us, I think last month. And Julian said that it's tougher today to create an IP than it was, a decade, 2 decades ago. And I would agree with this. I think you would as well. He said a lot of the brands don't want to take bets on new IP. And I can see why that is. Obviously, some will, but I think the fail rate has massively increased. I want to ask you, though, why do you think brands outside the industry are very hesitant to put their IP on chain?
Mm-hmm.
Is it the fact of, asset price? They don't understand the space? Is it just a willful ignorance? What do you think it is? And how do you think this changes over the next, let's say, 3 decades, which is a long time?
So we've been working with third-party IP for a long time. We ended up putting it in the name of the business, as you can tell, because and the name came from the fact that as a mobile game developer, our key strategy that we were known for was making games based on other people's IP that we licensed. We licensed things like Garfield and Astro Boy and Ultraman and things like that, and made games featuring those characters. And so we understand partnering with IP, and one of the things, the cardinal rule of working with entertainment industry IP is do no harm. So when you license IP from an IP holder, the number one rule is do not tarnish my brand. So like we can make a game with, a Disney IP or something like that. And yes, they want to make money out of the project. They want to make royalties. But if the project makes no royalties and just enhances the brand or puts the brand in front of a younger audience or a new geography or something like that, you've added value to the brand. So in the worst case, you've added something to the brand, even if it's not just measured in bottom line. So it's very important to them to consider any new venture's impact on what it may or may not do to the brand. And that's their sort of frame of thinking. So I think when it comes to Web3, the biggest consideration is, if we venture into this new area, is it going to enhance our brand, or do we risk detracting from the brand? And we will always take a risk-averse approach. Now, some industries are not like that. So, for example, European football or soccer, highly, highly fragmented, right? It's not like America where there's a league controlled by one corporate entity and they control all the IP, right?
The NFL, yeah.
Well, all American sports is like that, frankly.
Yeah.
But if you want to create another FIFA, you need to go out there and sign 300 agreements with every club and player and et cetera, because it's all fragmented. So as a result, lots of clubs and stuff are happy to just let you use their IP if you sign a check and give them enough money, even if it ultimately tarnishes their brand, because a lot of clubs are struggling and they'd rather have the money and they can risk the brand tarnishing. Whereas, you can't deal with the NFL with anything that will remotely tarnish the brand, because there's no money you could give them that would make it worth that.
It's a very good take. Yeah, the NFL is as capitalism as it'll get, and I believe in the concept of capitalism. I'm sure you do too. I mean, you guys have served a lot from that, and I think it's played out very well in your guys' lives. You measured the upside of what IP coming into the industry can look like, and the success, not even just bottom line, but from getting a new user acquisition, quote unquote acquisition, even if it's just brand awareness, is a massive plus. There's been many brands that have joined the industry, and obviously you know this better than I do. Some of them have been heavily disregarded after joining the industry based off people are fudding. So they're saying negative things. They're not happy on the timeline. And it's happened after a course of 2-3 years. Some of them have even left, for better, for worse, for indifferent. Some of them have left, whether they don't see it worth their time, they didn't make any money. That's their internal conversation that they have, that you and I, or that I don't know a part of. What's the downside look like for this? How would you classify, quote unquote, failing or not succeeding with a brand that comes into our industry that is already established outside? Is it not selling anything? Is it like being tarnished? But what does tarnished look like? Is it people don't want to buy product? Is it like fraud? Like, what would be the downside, like the worst case scenario downside of this that you've seen? You don't have to mention any names, of course.
Oh, simple. I can pick on a public one. FTX.
Okay.
It's the watchword. Everybody's afraid, like, I don't want to be associated with the next FTX. because the problem that happens for the brand is the fraud. Let's call it a fraud, right? Let's say a fraud or some kind of illegality transpires. What will happen is the brand partner will be the one that's on the front page of the newspaper, not the unknown crypto bro who was responsible for the project. Because the brand is the one that the reporters are interested in, so they become the story. So it becomes, how did, this famous household brand trust this fraudster?
Tom Brady, Steph Curry, they mentioned when this happened. You're right.
Because that's a story people are interested in reading.
Yes. And that's the half truth.
Yeah.
That's even the whole, that's the half truth.
Yep. Exactly.
Which is interesting. Robby, do you know who Alex Ramosi is?
No, I don't.
Okay. Big business guy. He's big in the United States, at least.
Mm-hmm.
His content is predominantly all business. He said something that I listened to on his YouTube a couple of days ago. He said this. I don't know if he's paraphrasing somebody or his own quote, but he said this. I wrote this down. Businesses don't die of starvation. They die of indigestion. I'll read it again. Businesses don't die of starvation. They die of indigestion.
Okay.
What do you think of this?
I don't know. I don't suppose I'm supposed to take that literally, meaning M&A is bad for you.
Yeah. No, of course not.
Okay. But yes, I think. It's interesting because you can take that in lots of different ways. I can't help but think of the starvation analogy being like the attention economy and lack of attention, because businesses also can, especially in an industry like ours, which is largely online, can die from lack of attention as well, just because people forget about you and you just are not interesting anymore. As we've seen in the meme coin phenomenon, is kind of the most stark example of that.
I would agree with that too. Yeah, it's a general quote, and I'm always interested to see how people kind of perceive, because you can say a quote, ask 100 different people, and they'll have 100 different interpretations of the quote. I think that's
sure.
That's really the beauty of this. You obviously have been here in the industry longer than I have, and Bitcoin, to my knowledge, is always kind of the indicator of the industry. Bitcoin goes up 10%, ETH follows at 7%, Cardano goes up 0%, XRP goes up 4%. Cardano is always at 0%, though. That's just a joke. These things typically tend to follow suit. Obviously, some outperform, some don't outperform, but ultimately everything is pegged to that, the way that things are pegged to the unemployment rate, things like that. Do you always believe that the industry will be pegged to Bitcoin, and the cycles will always be 2 over 2, 4 over 4, 3 over 3 years? Time off equals time on with cycles. Do you think that will always be the case, or will things eventually kind of level out and there won't be that massive fluctuation, rotation, and I guess instability of what we know to be crypto today?
So I think that Bitcoin is a macroeconomic indicator for us, as you said, like unemployment numbers or inflation or something else, the Fed rate, LIBOR, whatever. And all of these are just inputs that people who do financial analyses look at when they're thinking about investing in markets. But I think that you need to think about Web3 differently, because those are metrics that are largely driven by the section of crypto that is financial services, and particularly trading, because that's the most active segment, like liquid funds and things like that. And as the industry matures, I think we're going to have a lot more capital and consumers and companies focused on things that are not specifically geared around the volatile parts of what goes on, and are also more decoupled from those activities, because you're going to find big ecosystems, for example, that at the moment we basically talk about altcoins, right, which is like a generic catch-all of everything that's not really 3 cryptocurrencies, because I think Solana's not an altcoin anymore. But if we had a United Airlines native utility token instead of frequent flyer miles, that would also be what we'd call an altcoin today. But at the time that's mainstream 10 years from now, it would actually be much bigger than any of the current cryptocurrencies in terms of how widely held amongst consumers it is. Do you see what I mean? And that would be something that would not really fluctuate. It would be infrastructure for what they do.
I like to challenge the belief that not everything needs a token. And yes, we can argue that, culture that's tokenized is probably the biggest upside I think that crypto will see in the next 10 years, at least in my opinion. But I don't think everything needs a token. I personally believe, and I could change my opinion tomorrow on this, that I think the financialization of our industry has actually been our biggest Achilles heel, for the fact that my friends don't want to purchase any crypto products because they might lose $100 tomorrow, and some of them can't stomach a loss. And obviously, this is not just a blanket statement. It's nuanced, but I think it's been our biggest Achilles heel. To my knowledge, Gen Z, so I don't have a full scope other than what I've read on the internet of how the internet was actually created. Was everything that financialized like it is today? And do you think that crypto is being held back by our own regard because of the token price, fluctuation?
So I think not everything has always been so financialized, but the reason that crypto is financialized is because that's been the first obvious use case, because it's the most simplistic. Because if you think about like the difference between Bitcoin and Ethereum, Bitcoin, with all due respect to the ordinals community, which we love, Bitcoin has no utility, right? You're just supposed to buy Bitcoin and sell Bitcoin and hold Bitcoin. It does three things. And that's the design. That's the elegance and the beauty of it. That's why people like it. It's very simple. But when Ethereum came along and frankly blew all our minds and made us realize that, this world of smart contracts and programmable tokens allows us to build software with it, then all of a sudden pretty much anything is possible. But at the same time, we have the potential for financialization because, and I think this is important because we call it financialization, but it's actually asset ownership, right? It can be financialized because it's an asset that has value, that is provably owned by somebody, that can be transferred with low friction and low cost between two parties. So therefore, yes, it's financialized, but at the same time, we've given something that had no value. And so the exciting thing for me, when people ask me from outside the industry, they're like, oh, so, we hear this is a high growth industry and stuff. What do you think this, is the potential for Web3? And I'm like, well, honestly, I think it will transform everything. I think that's why I really love the name Web3, as opposed to crypto, because I do think that it gives you the gravitas of what's possible down the road. And I put it to them very simply, which is basically that now that we have the ability to tokenize content and give you true ownership over your digital stuff, think about the amount of content on the internet, right? And all the content on the internet is essentially valued at zero because we can't protect it.
Yes.
And so imagine if the entire internet was worth greater than zero. What would that be, right? Would it be $1 million, $1 billion, $1 trillion, whatever's bigger than $1 trillion? It's going to be a very, very big number. And so to me, that's the addressable market, and that's the exciting part. And I think the fact that it will also be potentially interoperable and usable by a greater proportion of the population of the world than the current internet is, I think those are all really exciting things.
Do you believe that, I believe everything at some point can get tokenized as well. I'm absolutely there with you. But do you believe that everything is going to have an asset price attached, or it's just going to serve as a token without the asset price attached to it? And is that even possible?
I think everything will have value, but it doesn't necessarily have to have value that's material. It just has to have a value that gives it a reason for being used and exchanged, consumed or traded. Meaning that, let's take a video game, right? We all talk about games, and the early adopter early adopters who've played Web3 games have often been very sophisticated Web3 audiences. And so therefore they've attracted audiences that are very high spending. And this has been great for game companies because they're like, oh, this is interesting. Actually, now I can create a game, and instead of people spending 2 cents a month, they're spending $200 a month. And so I can build a different kind of game because I have a different audience. But there is also a future for games that are going to have transactions of infinitely small amounts, because basically in the world of, let's say, Apple and Google mobile games, we're limited because transactions must be 99 cents, right? You can't make cheap transactions. What if you had a game where you had consumables? Let's say you had a whatever first-person shooter, and you had to pay for each bullet you shoot, but that it was valued with something with 20 decimal points. So it's almost negligible cost, but it does add up. You can think about the economy of a game being completely different in that case, right? And it becomes a fun tool for developers to use. So I think it's not about the quantum of the value, it's about your ability to measure it that becomes exciting.
That's very interesting. And this is a good topic. A lot of the world operates, I think, in cycles, like everything does. Everything comes in, there's always a means to an end to most things. I've seen, or I've read rather, because I've read that during the Industrial Revolution, I'll give you an example, Industrial Revolution versus the digital revolution that we're in now. I think there's been points in history when that revolution, industrial one, were like the brands, the businesses that were involved there at some point, quote unquote, own the world, ran the world from a valuation standpoint. I think the internet changed that. The brands of quote unquote Web 2 now quote unquote run the world, from social media to applications to integrations to end users to all that stuff. I kind of see crypto, Web3 the same way. Do you think the Web3 giants within our industry today could maybe surpass the giants of Web2, and they become the new superpowers of the world based off of that industry scales so much faster, further, greater, better than the industries that came before it, and they become the new dominance? Like when you think of who runs the world today in terms of like where the money's flowing, who has all the power, it's the companies that birthed from Web 2. Do you think the same thing is possible with our industry today, despite how small it may be?
No.
Wow.
And I say no because I don't think that's the goal. I think our industry is the antidote to that. Because I think the fact that Microsoft, Google, Apple, and Facebook together are worth $5 or $6 trillion, I think is a shame. Because it means that the world in which they play for software and for users, they view as a zero-sum game. So they say, look, if I have my customers here, you can't have any of them because you're stealing my customers. My job is to steal customers from you. And so essentially, if you think about it in a geopolitical standpoint, they're pretending that they're North Korea, that they want to be isolated from the rest of the world and control everything 100%. Whereas what we do in Web3 is much more about globalization. We're like, look, the world is an exciting place and we should all strive to have a piece of the entire world's pie, as opposed to, which we share with the rest of the world, as opposed to dominating our small slice, right? Because I think that what will happen with Web3 is that the pie will get so big that actually we may still have businesses that are the size of those Web2 businesses, but the pie is so much bigger that there are hundreds and hundreds of those businesses. So nobody will control, but they may achieve similar scale. Does that make sense?
Yes. Do they inevitably remove Google? Like, is there a substitute, or Google will always be Google, and YouTube will always be YouTube? These companies will always be themselves, and they'll always be used. And we are effectively just, adding a layer on top of them, but
Yep.
we're still very relevant. So there won't ever be an extinction then.
So those four companies are a bit different. Google and Facebook are easy targets of them because they're basically advertising businesses, and advertising, and so they've created a particular attention economy around driving advertising. And I think that is the one that's going to be most disrupted by Web3, because advertising in a world where you can actually charge for because the reason for their existence is that we couldn't protect copyrighted information on the internet. We didn't have the tech to do it. Personally, I was involved in, I had a music portal in 1999. I mean, that's a great way to date myself, right? Because the vision at that time was music was becoming digital and we could sell you downloads of music. But in reality, we didn't have any way to protect the copyright. So frankly, one guy bought it and then shared it with everybody you knew. And so the model then became streaming and advertising supported, like YouTube and things like that, because we didn't have the tech to be able to protect the copyright. But if blockchain had existed back then, we probably would have stuck with the record/CD model of buying an album, because that was what the industry always did. It only had to change because we didn't have the tech to protect it. So paying for content and owning it ad-free is something that consumers do like. And I think that we're seeing that now with other products. I mean, I know lots of people who, for example, subscribe to SaaS services, AI search engines and things, because they don't want to look at ads anymore.
Yes.
And so I think that these are things that are definitely going to be disrupted. And I think that there are also businesses that will really benefit from interoperability. That's, I think, the most exciting feature of what we have ahead of us in Web3, is this idea that as we start to make content more and more interoperable, then it becomes really exciting, because a lot of these big Web2 giants have really built monopolistic style businesses on the back of what economists call rent-seeking behavior. They control an audience and they extract value from that audience, and they just continue to drive up the price because consumers have no alternative. I mean, great similar example, like here in London. London is famous for its black cabs, and they are famously expensive. And so Uber had an amazing opportunity to disrupt the market. And, the price of an Uber it started out being probably half the price of a black cab when they first started. And they were always the cheaper alternative. So everybody, that business grew tremendously because everybody wanted a cheaper solution. But you get into an Uber now, same price as a black cab in London. Right. So there's no advantage to it, because basically they've said, look,
supply and demand.
Yeah. We drove everybody else out of the market. And so now we just keep raising prices.
We own it. We do whatever we want because we're the only solution that fits.
Yep.
That's what it is. Supply and demand metrics. You obviously read Chris Dixon's book, right? You must have.
I did.
Yeah.
And very well written, I have to say. And I think he did a really, really great job of articulating it from the perspective of a traditional Silicon Valley technologist.
Yes. As you were mentioning the monopolization of Google, it took me back to when I was reading the book. I whatever reason, I had a bunch of flashbacks reading the book and highlighting pages. I do want to switch gears. In your life, it doesn't have to be in a vacuum to Web3 to crypto to blockchain. What would be your biggest I want to do over moment in your life? Your biggest do over. We all have one, I think, even if it's not public.
Honestly, I think everything is a lesson. So, I mean, in my professional career, I think almost nothing I would do over.
Wow.
I had some, I mean, I had some bad experiences. Like my first startup, I had to close, we ran out of money and had to fire everybody. I mean, just it's terrible. Like there's nothing worse than firing people, honestly. And but those are experiences that you have to go to learn, because you can't, some experiences you just can't learn through reading about them. You have to experience it yourself to really understand the gravity of it. And so it helps, it's as your parents will tell you, it's character forming, right?
Yeah.
Which is code for suck it up and just deal with it.
Keep going. Yeah.
But I think it all, it all helps, frankly. And I think that's, I want people to take that, as a positive thing, because even if you're going through struggles at the moment or whatever, don't worry, it does get better and you will learn something from this and you will thrive as a result of that. You just have to be persistent.
You have obviously, built startups before. And there's obviously, I think the startup culture is very, very popular now than to maybe where it was, 50 years ago, for obvious reasons. I think it's very heavily glorified. The amount of people that say, and you probably get this all the time, man, I want to be a CEO. And then their day one job on the CEO and they're getting punched in the mouth 100 times. And they're like, I don't want to do this anymore.
Yep.
And then they, don't want to be a CEO anymore. Sometimes I think it takes a hard lesson to, see if you're really worth it or not, or you're going to stick with it. The concept of startup unicorn, I think, is happened a lot more today. I don't know if it's easier to have a startup unicorn today, not even just, in crypto, or if it's just a volume game. It's, you have 10 times more startups. You'll ideally get maybe 10 times more, 5 times more unicorns. Do you think that that our industry of crypto Web3 will birth more quote unquote startup unicorns? And I'll let you classify that how you want to classify them, being unicorns, baseline, users acquired, infinite game timeline of being here, than any other industry, because we're so new and early into this? Because
I think that this is just something that happens every time you have kind of a seismic or a generational technology shift. And if we start to break down those Web 1, 2, 3 timelines, they're roughly 10 or 15 years long between those different transitions. And they're really big. I mean, you could argue that the transition of involving AI in all aspects of technology might be another one, although it will likely overlap with what's going on in Web3 at the same time, because they're actually kind of cousins to each other. I mean, I think personally that they're very complementary technologies. And so, yeah, I think that there are going to be lots and lots of very successful businesses created out of this. And we will have not just successful businesses, but once you have an initial crop of successful businesses, then you will have M&A, because they will go and acquire other people who are just, in their wake to grow their businesses faster. And so there's a whole food chain and cycle, and it will benefit lots and lots of companies.
What is your goal for Animoca Brands next 10 years?
What is our goal? Honestly, I would just like for things to keep moving on the same trajectory. That would be really great.
That's a very humble response. What's I'll change the question. What's your vision the next 10 years? Where do you see yourself in 10 years?
So I think our goal is to make sure that Web3 happens, right? And I think that and by that, I mean, like when we think back to the Web 1 days, I shut my first startup down in 2001 because we were a web dev company, and companies didn't want websites anymore, because there was a period in 2001, 2002 when people thought, well, maybe the web's not going to be a thing after all, right? And I feel like that's maybe a little bit where we are in Web3 at the moment, where there was a flurry of excitement and then, some big meltdowns and last year's market movements. And so a lot of people are like, well, not sure, maybe NFTs aren't a thing. Maybe Web3 doesn't have applications outside of trading of financial instruments. So I think our job is to make sure that everybody understands that actually, whether they know it or not, blockchain will be in the infrastructure of what they do. And my favorite example is that nowadays, lots and lots of people do things like sign documents using things like DocuSign.
Yep.
And DocuSign runs on blockchain. So there you go. You're already using it and you didn't know it.
I didn't know that either. I'm gonna be honest with you.
Yep.
I didn't know that. I didn't know that. Shame on me for not knowing that. Where can people that are listening to this, when they see this, when it gets posted, and they're like thinking, I want to work with Animoca brands, how can they go about doing that?
Start with our website. Obviously, if it's employment related, we always post jobs and things there, and come and seek us out. If you want to partner with us, we are very active in the Web3 community. You can come and meet us at events. We speak at events and we have booths at events. But otherwise, just honestly, reach out to us on LinkedIn or Twitter or wherever. We're always happy to chat.
Awesome stuff. And I will attest to this. Robby is very friendly on DMs. I promise he won't bite or anything. He's very responsive too, which I appreciate. Very timely responses too. So I appreciate that a little extra. Guys, we appreciate your time today. Robby, thank you for jumping on. We'll see you guys next time. Bye-bye, everybody.